Welcome to The Foundry, where leaders are forged daily. Each week we investigate themes of leadership, entrepreneurship, and mindset with some of the greatest minds in real estate. And now, the data scientist of real estate, George Roberts.
All right, welcome back, passionate investing community. Today, I have the pleasure of interviewing Darryl Murphy Sr., founder of Commercial Multifamily Masterminds, also which is a member of the GOB Network. Now, really excited to interview Darryl today because we're going to talk about something which I think has caused a lot of confusion unnecessarily. We're definitely going to be talking about underwriting today, and I think that it's something that doesn't necessarily have to be a mystery, but I think for most people, this is kind of where we start out, right? You have to go out there and become a deal finder if you want to become a multifamily owner. And to do that, I think you really need to at least master underwriting, or at least understand, hey, when is somebody doing it right? When are they doing it wrong? And when you go back and you re-underwrite that deal, and I do think everyone should re-underwrite the deal, whether you are an active investor joining the team or a passive investor who's putting their funds in, very important. I don't really see any other way to invest properly. And I guess we'll use that to frame the discussion. Now time to introduce our guest. Welcome to the show, Darryl.
Thank you. Thank you very much for having me. It's a pleasure to be here.
Well, thank you so much. We're glad to have you today. And like I said, I've sort of given you my approach to underwriting. Now, for me, it's something everyone should do. We're not all going to specialize in it, but you need to understand the deal. So everyone should be an underwriter.
So I'm not going to say that everyone should be an underwriter. Well, what I am going to say, everyone should have at least a basic foundation to understanding underwriting. So now there's going to be two parts to this. The one part is going to be you underwriting as an investor that's going to be presenting the underwriting to other investors because you're a GP. But then there's going to be the second part of the, say, underwriting where now you're an LP. Okay. A lot of times, investors, let's speak on the LP side first. Okay. So a lot of time investors, and I think we all can relate to this, pretty much a lot of investors, they're gonna invest with you because they know you, right? Oh yeah, I know Darryl, I know George, yeah, I know them. So they know you, they like you, and they're going to invest with you because they, hey, I know who they are. But you should at least be able to say, hey George, hey Darryl, I know you, and I know that you're good guys and stuff like that. But let me see the underwriting. Mm-hmm. And then when you look at the underwriting, you may happen to, and again, you don't have to go so in depth. Being, just at least know the basic. Well, wait a minute. Wait, you can say, hey, wait a minute. Why is there an equity multiple that it starts out as a negative, then it goes to a positive or something? At least you should know the basic foundation. Because that's what you're putting your money into this deal. You should know that. Now, for the GP side, let's talk about the GP side now. Because I don't want to take too much time. Let's talk about the GP side now. Now you need to know this underwriting. You need to know even with as an LP, but as a general partner, you're going to be involved in so much. You're going to be involved with capital raising. You're going to be involved with dealing with the lender. There's so many aspects and so many things you're going to be involved in. So for you to know that underwriting, you should know that underwriting, because now, even if the LP doesn't know underwriting, him or her or that lender is going to want to know certain things in that underwriting, because now I'm about to give you my money. So you need to know that. You need to be able to explain that underwriting to me. Let me show you this here about the cash flow. Let me show you this about the IRR. If a lot of people don't even think about the IRR, but equity multiple, average COC, though that stuff you need to be able to explain to that investor or whatever. So you as a general partner, you definitely should know that underwriting, because if you can't explain the underwriting, you're not getting no money.
Right. Right. Now, when you talk about explaining the underwriting, in my opinion, really there's two steps to that. And the first is understanding the true drivers of the deal. And the second is then putting that into a narrative, a simple story, not just a whole bunch of numbers. I can't stand people who put all their underwriting up on the screen and then they try and go through every number. That's not telling me what's important.
Right. And I totally agree with that. So I'm going, and this is what I'm going to say. Underwriting tells a story. It tells you a story that is based on assumptions, that's based on predictions, that is based on other factors of the economy, the environment, and everything. What you are actually talking about with that underwriting is a story. I'm telling you a story. This is the story to how we're going to work this particular property. This is the story that we learned from this particular property. And we feel that we can make this story even better.
Yeah, exactly. The story of what, how things are, the story of your business plan, how you're going to make things work in the future, how you're going to improve things.
So now, so what am I talking about, everyone? Huh? What am I talking about when I talk about the story? I'm talking about you looking at the rent roll, you're looking at the T12, talking about you at least reviewing the OM if there's an OM. Because if you're dealing directly with the seller, there may not be an OM, right?
Right.
Then you also, and I'm also talking about what? The economy. What's going on in the economy? I'm also talking about what is going on in that neighborhood. I'm not, if the city is good, because I have my own way of criterion a city. I'm sure everyone has their own way. Well, what is going on in that neighborhood? What's the story there? See, there's a lot more. See, everybody think, oh, I could just throw some numbers up and an underwriting. I said, no, you need to know what's going on in that neighborhood. You need to know what's going on in that city. You need to know what's going on in that apartment complex or whatever. You need to know where also to get these factors to tell the story.
Well, why don't you talk about the market in the neighborhood? I think that's huge. And I feel like that's something that a lot of newer underwriters miss. And I would say even some more experienced underwriters, when they do go out and tell that story, like you said, if you don't go out and tell the story, if it's not clear to people, then you're getting no money. You're not getting anywhere. So, I actually like to start with the neighborhood, because I feel like, look, if I'm not comfortable in the neighborhood, if I'm not going to be there, and when I say comfortable in the neighborhood, I don't mean like 3 p.m. on a Wednesday. Go by there Friday night, Saturday night, and if you still feel like it, all is good, hey, go ahead and invest in that. But the other side of things is that maybe you notice something like, well, wait a second, the lighting out here is just not right. I would feel safe if we had a decent floodlight out front. So yeah, for me, the neighborhood is first, because it's great to weed things out. And then once you get that demographic story, for me, hey, people are moving in, you got jobs. If housing prices are increasing, if you see those sort of demographic tailwinds, and you have reason to believe that story will continue, boom. If the underwriting is good, then I would say pull the trigger. But if you don't see that demographic story, if you don't have those tailwinds, then I would say, well, that underwriting story, I was going to have to be, 2 or 3 times as strong. And I really take a very different look at the underwriting at that point. And unless I see like we're really buying rights, I don't like the neighborhood, I don't like the market, then I'm sorry, we're just not going to do business.
Correct. So let me tell you, the approach that I take and in my coaching program is this. We're going to take a look at, it's broken down, because I've created a real estate market analysis form, and it's broken down into two sections. It's broken down into the city, and it's broken down into the neighborhood. But in my coaching program, my students already know, what is the first question I'm going to ask you? First question I'm going to ask you, did you complete the real estate market analysis? That's going to be the first thing. The reason being, everyone, in my real estate market analysis form, if the city doesn't meet the criteria, there's no need in going any further. Just drop it. Move on to something else if the city doesn't meet our criteria. If the city meets the criteria, then we look into the neighborhood. Does the neighborhood meet our criteria? Now, that has to meet certain things, certain factors, okay? Now, if that neighborhood doesn't meet the criteria, there's no need in us going any further. There's no need in sitting down and underwriting it. There's no need in doing any of that. Just move on to the next deal. Thank the broker for sending it. However, it doesn't meet our criteria. Yeah. So the city meets our criteria, thumbs up. Boom. The neighborhood, now if the neighborhood meet our criteria, boom, thumbs up. We're looking for income. We're looking for even if it's a value add, because I know I've heard a lot of people say, well, we're doing a value add, so I really don't care about the market cap. I do care about the market cap, even if it's a value add. And I'm going to tell everybody why. No, you may not have to care about the market cap going into the deal, because we already know about that, right? But you do want to know about the market cap when you're exiting the deal.
Right.
Okay. That's when you're going to say, okay, well, now my market cap on exit should be blah, blah, depending on whatever. However you want to go up, whether you're going to 1/10 of a point or whether you're going to, however you want to, whatever you're doing, right? You need to know what your exit market cap is going to be, okay? So let's summarize this. City, I want to see income growth. I want to see job growth, population growth. I want to see low crime. I want to see there's one more, but I can't remember, and I don't want to take a lot of time thinking about it. Once I get the green thumb on all of those things, then we're going to jump into the neighborhood. There's certain factors I'm looking for in the neighborhood. Can in this neighborhood doesn't meet the criteria for a certain income level, doesn't meet the criteria for a certain oh man, I'm getting a brain freeze, everyone.
Yeah, no, I get it. I mean, all those demographics,
I think
matter.
I think now also, everyone, listen. Everyone out there, you all have your own criteria on the way that you're going to underwrite things, okay? But it should meet a certain criteria, because you're looking, the most important thing on any deal, once that deal is closed, is the investor's money. Nothing is more important than that. Their money is the money, and you should be number one in protecting their money. Do whatever you need to do to protect their money. Okay, so I'm gonna tell you right now, underwriting is something that I love, everyone, and this is what I teach: underwriting. You have to know foundation in underwriting.
Yeah, beautiful. I love it. And it's like many other fields, like in venture capital, you'd ask about the size of the market. What's the total addressable market? What size of the market do you think you can actually capture, right? Either addressable market, et cetera. And if it's not big enough, a lot of venture capitals, that's where they triage their deals. So yeah, I love it. Similar approach myself. I call my first rule of underwriting triage, always triage. And if you're not triaging those deals, you don't have the time to put into the good ones. And I see a lot of people that bring something that's kind of marginal to me. And I'm kind of sad because they did all this work, and it's something that I probably would have turned down. One of the things I notice is that once you go through due diligence, if you didn't lose a couple points of IRR, you probably didn't do proper due diligence. So if I'm looking at something and the IRR is about 15, I'm thinking like, well, if I trust everything on this page, and that's really what underwriting is all about. I mean, hey, you could trust the broker, we'd be done, right? Just buy it already. It's really about verifying all that. And if I get to the end of underwriting and I'm saying it's 15% IRR, if I believe everything here, I can probably sell this to my network. I'm thinking, no, I don't want to do that. I want to go in with something like 18%, 20%, so that when we do find these things, and when you're not able to retrade, which even today, retrade is kind of a dirty word, right? I'd like to ask what you think about retrading now. I would say it was a very dirty word back when we were in a seller's market. But the way I look at it is, look, you give me an OM, you give me assurances that I'm buying, like 500 head of cattle. And then I go and I look and, I examine the stock and, there's 463 and they're not too healthy. It's like, we got to, I can pay the price I promised if you give me what you said you promised.
Right. So I like what you said. It's number one. Okay. First, the question was, Darryl, what is your thoughts on retrade?
Yeah.
So if you have to retrade, well, first of all, what's my thoughts on retrading? I think retrading, I don't look at it as a negative thing. I really don't. Now, this is where, and now this is where I'm going to tell you to be careful, everyone. Don't go in there knowing that the property is overpriced, right? They ask and say 10 million. So you're saying, let's just tie up the property. Let's just tie up the property. Offer them the 10 million. Then you offer them the 10 million, then you go through, you start doing your due diligence. Then now you say, well, let's retrade. No, that is frowned upon. I'm going to say that is going to be frowned upon by the broker, by the seller, but by you doing that, that also hurts the person that's going to come after you.
Right.
That's going to hurt George. That's going to hurt Darryl, because now they're going to look at Darryl and George and say, oh man, these guys here now, they're going to try to do. Well, Darryl and George, when we do our underwrite, we're not looking at trying to retrade. We're looking at trying to really get this particular deal. Now, I also said I don't think retrading is bad, because after I do my underwrite, say you asking 10. Well, my underwrite's coming in at 9.95 or 9.2, right? So I'm coming in 9.2. We got the property, but there are things you, the seller, didn't tell me.
Mm-hmm.
And during my due diligence, I find something crucial. I'm not talking about something wrong with the cabinets or something wrong with the doorknobs. No. We're talking about something that is crucial. The foundation on two of the buildings is compromised. Now we got to call an engineer out because now we got to raise the buildings up.
Right.
Okay, the electrical system has default. The plumbing is we scope the lines.
Right, like the aluminum wiring and stuff like that, right? You can't even get insurance on it sometimes.
Exactly. So in a case, there are some cases where, now you got to go back and say, yo, this wasn't mentioned about the plumbing about to collapse. It's not mentioned that the building is leaning halfway down. Okay. Yeah, I got to fix this. I'm going to fix it.
Right.
Or you're going to fix it.
Yeah.
It's going to be one or the other. Okay. So in a case like that, I can understand where you have to go back and say, look, Darryl, George, you didn't tell me that the plumbing was jacked up and the electricity jacked up and all this jacked up. You didn't tell me that, right? Then I can understand having to retrade, but to go in with the intention,
right,
of going to retrade, no, I believe that in our industry, that's frowned upon and it shouldn't be done.
Yeah, rightly so. Yeah, and I appreciate the distinction. Integrity in business, very important. But glad to see now that people are no longer seeing that the integrity seems to be affected all on the buyer's side. Sellers, particularly now in more of a buyer's market, shining a light on some of their more deceptive practices. So anyway, I guess you can kind of see I'm more on the buy side. I'm still young in this industry, but love your perspectives on underwriting. Again, I think it's just absolutely essential. What would you say are some of the most overlooked things that you find now when one of your students brings you underwriting? I know you got some rules and I love it. Look at the neighborhood first. Totally agree. What are some of the things that you find newer underwriters might be overlooking?
Well, something I've noticed a lot of, like, underwriters that's new and really just getting into this industry, they're willing to overpay. I don't know if they realize it that they're overpaying, but they, I've had I've had people come to me and hey Darryl, would you take a look at my underwrite because I'm going after this build. I'm going to offer them. These are the words that I hear. They want $10 million, so I want to offer them $10 million, and I'm like, what? I'm like, let me see your underwrite. But then it's like, it's really worth it because this is this and this is that. You go through the underwrite, I'm like, yo, this probably not worth no $10 million. So what is it that they're overlooking? I think they're overlooking that they don't have the knowledge and the education and what to look for in the underwrite. That's what that's what you're overlooking. You don't have the knowledge, you don't have the experience. If you're willing, if you're just coming off the top, come on, well, I want to get what they're asking for, and he's rushing me, and he's slow down, break. I don't care about him rushing you.
Yeah.
I don't care about that. You need to worry about what your investors want. You need to worry about what your underwriting is saying. You need to worry about that. Don't worry about him. Don't worry about the seller. And everyone, listen, sellers out there, don't get me wrong when I say this, but I really don't care about you. Not in a disrespectful way, okay? Don't get me wrong. Please don't get me wrong, and don't send me a bunch of emails. When I say that, what you want is what you want.
Right.
I have to get what the property is worth today. That's what I mean. So I can't take you into consideration. I have to take into consideration the information that you have provided to me. I have to take into consideration the criteria that I've set forth, and I have to take into the biggest criteria and the biggest consideration is my investors. What are they willing to give me for this property? So I don't mean to be disrespectful to anyone out there. Don't think that I'm being disrespectful to you when I say I don't care about what you want, but what you want, it may not meet what I need for my deal, for my investors. That's what
negotiations. Negotiations are huge, and I completely agree. New investors often they anchor on that price, and the broker takes advantage of some naivete and tells them, like, hey, this is what's going on, and we got other buyers. Like, oh well, it's okay. Maybe you don't really want this. You don't have to buy this. Et cetera, whatever. But negotiations. If somebody accepts your first offer, you offered way too much.
Without any hesitation, they say, yeah, accept that offer.
Yes. Yeah. So you've got a underwriting series going on right now, and I really appreciate this. I appreciate all the things you're doing online. You've got some great shows out there that people can come and learn. So I want you to talk to our audience. What's the focus of this underwriting series, and who should come?
So it's what George is speaking of is the commercial multifamily mastermind, the underwriting show, where our platform is based on, it's an educational platform based on underwriting. We believe in educating, whether if you're experienced, non-experienced, I don't care what level that you're at, come on out and partake in our underwriting show. So we have guest speakers, and our whole platform is about underwriting, the importance of underwriting. What is it that you may need to look for in some of your underwriting, and stuff like that. So it's based on underwriting to help and to educate those that are not, and even help and even educate those that do have experience in underwriting. That's what we talk about, underwriting.
Yeah, good. Yeah, I think that it's totally appropriate to pitch to multiple levels. When you do talk about underwriting, you can always bring in some nuances that I think are, very much at a much higher level. Well, let's talk about some of the other things you're doing for the community. And again, really appreciate what you're doing for the
Yeah,
community. If you wouldn't mind, I'd love to ask you about the GOB Network. I've gone to
sure.
one of the conferences in the Windy City, a lot of fun. What I love, I will say the most about this group is the founder, Jim Bix, right? He'll say, don't go and spend, tens of thousands of dollars on some guru. Come here. And then, as I understand, you come and join the network, and if you can afford to pay for some of the resources that you're given, go ahead and you pay some money for that. I think it's more voluntary, but you're not paying tens of thousands of dollars to get education.
Mhm.
It's more a matter of leaders in the community stepping up and helping to educate the others.
Right. So the GOB Network is, number one, it's a nonprofit organization, right? So what George is speaking about is a contribution, right? It doesn't come with 50, 60, 70,000 dollars. Actually, to join the GOB is free. To communicate and to learn, to come to our sessions and classes, it's free.
Yeah.
To, a lot of the data that we have is free.
Yeah.
So what if anything, we may ask, can you give us a contribution? There's no minimum, right? There's no minimum where like a minimum is $1,000 or a minimum is $50 or a minimum is $25. You could donate what you could donate. It's a contribution. Okay. So
Yeah.
but the GOB network is an educational platform that provides network and support to help those that need the help to get a deal done. That's what it is.
Yeah, I love it. And a great group. Now, I just want to make sure everybody can reach out to you. What is the best way to reach out to Darryl Murphy Sr.?
Oh, you can reach out to me on LinkedIn. I'm known Darryl Murphy Sr. on LinkedIn. You can reach out to me on Facebook. Now, if you reach out to me, please put a little note that you reach out to me. You heard of me on George's podcast, so that way I won't be like, where I know this person from. Put a little note in there also, so I can let George know how many people have also got in contact with me, so that he will know how many, who's possibly listening to his show.
Yeah, I love that. And I really appreciate everyone who listens to the show. Listeners, you are some of my favorite people in the world, those that I know
Right.
and those that I don't know. You're probably my favorite person in the world, and I just haven't met you yet. So I really appreciate all of you out there. Thank you for making the show what it is. Last I checked, we were number 20 on FeedSpot's list of top apartment podcasts. Could not have done that without you. So thank you all.
Thank you.
And thank you.
And thank you for having me.
It's my pleasure. Thank you.
Right.